Okay, hi everyone. So good afternoon, everyone. My name is Tuan. I'm the CEO of Fin Ratings. So thank you for all of you for joining our webinar on the outlook for Vietnam credit markets, corporate bond default and possible impacts today. The event is making online with from Hanoi, our headquarters in Vietnam. And thanks again for hundreds of audience around the region attending our event today. So why are we making this event? So as an independent credit rating agency, local license agency in Vietnam, over the past few months, we have received a lot of questions about credit markets and what's happening on the markets, not only by local investor, but foreign and retail investor as well. So that's motivated us to make this event as a way for communication with the markets. So in addition to a number of publication and newsletter about corporate bond markets and rating announcement, we would like to take this opportunity to enhance our mission to enlighten the markets and as a role of the CIA, the domestic rating agency, for the better capital market and bond market specifically in Vietnam. Thanks again for spending time with us today. So we will spend about 1.5 hours, and in case we receive a lot of questions online, we can extend 50 minutes or so for better support you in this event. So for the speaker joining us today, we have 4 people, and I think I would need your own introduction very shortly, probably from anh Po, and then Tung Anh, and then Khang, and then Prachi. So please, anh Po.
I'm Paul Coughlin. I chair the Credit Rating Committee of Fin Ratings, and my background had been with Standard & Poor's. I worked there for around 26 years and ended up being global head of credit ratings at S&P based in New York. And for the last 2 or 3 years, I've been assisting with Fin Ratings works and providing technical advice, as well as chairing the Credit Rating Committee itself.
Thank you, anh Po. And actually, Mr. Paul Coughlin working with our team in the daily basic and in almost all rating action, and he supporting our team, and I think he learned a lot about Vietnam, and with a combination of his international exposure and global perspective and with the local insight. So hope he can share good information for audience today. So next, please.
I'm Tung Anh. I have been working for the government for the last 8 years before joining Fin Ratings, and I'm now the research manager of the economic and credit risk research, and also the head of sustainable finance service in Fin Ratings.
I'm Khang, head of analytical team. My background was in investment banking and auditing. So glad to join Fin Ratings 2 years ago, and heading the team for around 40 rating actions in the past 2 years. So happy to join the event today.
Thank you, Khang. Prachi, can you speak something and have yourself introduced to audience, please? Hello, Prachi. Okay, I'm waiting for her. Just a little bit about myself. For some of you haven't known yet, so I'm the founder and CEO of both Fin Group and Fin Rating. We have 15 years in information business in Vietnam. I used to be the auditor, and then working as a manager as a deal transaction service in PricewaterhouseCoopers in Vietnam and Sydney, Australia. And then I came back to Vietnam 15 years ago to be the fund manager with Vietnam Holding, managing the public fund with $150 million US. And I did not find much information for my profession for investment as an investment analyst. So I and two others, co-founders, started up this business. And we expanded to credit ratings business 3 years ago. We got the license from Ministry of Finance, and we have been very active in capital markets, supporting and providing the very unbiased and balanced view for investor and market participant in the capital market, not only in the bond market. Prachi, are you there?
Yes, hi, I am. Hi, everyone. My name is Prachi Gupta. I have been associated with Fin Ratings as a financial advisor for the last 2.5 years. I primarily work with the financial institutions ratings team. Giving my background, I was working with CRISIL for close to 11 years prior to joining Fin Ratings in the financial institutions rating space. CRISIL is India's largest credit rating agency and a subsidiary of Standard & Poor's. Thank you.
Thank you, Prachi. So let's move on our business, who we are. As I mentioned, we are information business. We have a long history, 15 years. We are the Vietnam's leader in this area. For a group company called Fin Group, we partnered with Nikkei 7 years ago, and we're providing financial information. We are like local, small Bloomberg. We support data platform for almost all big institutional investor here, and thousands, 10,000s or more of professional investor. We do providing bond pricing as well. Up in the recent bond run in the markets, and we do provide the private company information, scoring, supporting the cross-border trades between Vietnam and the world. And mostly we support insurance, non-life insurance, trade, and KYC for anyone, especially from overseas, offshore, looking at Vietnam and would like to check about the industry and a particular company or counterparts, and assessing the counterparty risk when making the business or commercial partnership with them. And we do piloting the ESG scoring, because part of the information business, we receive a lot of questions and queries, how the environmental and social and most sometimes for big company is the governance, a Vietnamese company, how the score is or how the commentary. So we are developing a framework, and we have piloting for ESG scoring with support for public company and private company as well. And we do have a team on market research and consulting, working with foreign investor for M&A and private equity investment in Vietnam. We mostly providing commercial duty and market duty, given our business on database and about the sector and about the company. We have both from top-down approach when looking at the very high level, and to the bottom-up based on the micro data from corporate level up. And Fin Ratings, we was licensed by our government 3 years ago, and we partner with S&P for technical support, with support from ADB. And we are now rating around 20 issuers across the sector, from financial to corporate, including real estate. And we do provide some related service like credit diligence, credit reports for the issuer or Vietnamese company. They haven't got engagement with us, and we do provide the green finance verification under international standards of CBI, climate bond initiatives. That's a new trend. And then now let's move on the main content for today. So we will spend about 1.5 hours or a little bit more. We have received a lot of questions from audience around the global, and especially from Singapore, Vietnam, and Hong Kong, and so on. And we already put in the section number 5. We will pick up around top 10 questions most relevant for all of you, and we will discuss that. And we are open for any question. So please, in the meantime, put into the chat room of the on the screen. So we will have some time to look at that, and it's good to have some kind of interaction. And in case you are willing to talk, just open your video and open the mic and talk with us. So we are happy to have some direct interaction if it is convenient for some of you. So for today, we will spend 1.5 hours talking about from four main issues. Firstly, about economic updates, what's happening in Vietnam. Some of you may heard about from media, but we would like to discuss a little bit about that, because when you talk about the capital markets and corporate bond and banking, I think we need to talk about macroeconomics, how the current situation and what should be the possible outlook for Vietnam. And then we will touch on very hot topics. Some of you could be considered as a main topic for today. It's about how corporate bonds market after 5 years of booming, and now is a lot of defaults happening, and how the situation and in what sector. And then we will look at the real estate sector, specifically residential, because as some of you may know, that's the main issue, and that's have a big implication for our financial system, banking, and of course for economic growth as well. Very important sector for Vietnam. And then we will look at how the impact for the banking system, given the issue of corporate bond markets and real estate credit performance. And we got a lot of questions from investors locally and foreign for this topic. So we'd like to discuss about that as well. And then Q&A and discussion. Of course, I will spend a few minutes to talk about how sharing our experience in helping investor doing business in Vietnam with confidence. So let's move on the first topics, talk about very big topics, but we have a short, a little time. So macroeconomics, some of you, I think almost all of you agree with me in the long term. Vietnam economic outlook is very positive and very bright. We have a bright future, long-term growth, and many other research firms also have some forecasts. 6% this year, and next year might be 7 or even 7.5% of GDP. But in the near term, we see a number of headwinds, as we show there. We would like to share with you, and of course, we still have some tailwind or positive factor in the short term to support our economic growth in the environment for credit market and banking system to go in the near term. What are the headwinds? So just a few numbers there for you to think about that, and I will call for some view from here. FDI. Vietnam economy still very much supported by the private investments, specifically from FDI, not only the domestic companies, but unfortunately in the Q1 we have very big decline, 38.8% comparing to the same period last year. So what should be the reason? So of course, from our research, is the COVID period 3 years ago is one of the main reasons, because from our experience and many of you, it takes about 2 or 4 years to make a big investment FDI here in Vietnam. But is that temporary, or this will last for long? We are looking at that. And good news that in this April, FDI already increased. But taking out the biggest amount injected in Vietnam from the SMBC, the Japanese investor, put into the VP Bank, is still decline. So what's happening next in the remaining of the year? That's something questionable, and I will pick up some view here. Import-export turnover, unfortunately, is down almost 13% as well year on year. So specifically with the reduction from the main market as a export market to Vietnam, including US, EU, and China. You can have a look at figure number 1 there. Specifically, US and Europe, they contributed about 42% of total export of Vietnam. So that's something we think is a headwind, given what's happening, in the destination market like US and Europe. And China reopening up already, but still witness some decline in the export. But of course, in the meantime, and in Q1 just now, we posted very moderate GDP growth, 3.3%. So that's put a big challenges for remaining 3 quarters of the year. some estimate about need to be 7 or 8% on average in order to have 6.5% as target by the government. So we don't have an exact forecast yet, but we think it should be challenging for achieving 6.5%. We tend to agree with IMF recently about 5.8% or so. So let's see. Of course, tailwind, we still have a lot of things positive for foreign currency. The forex rate quite stable. Capital accounts are still stable, and indirect portfolio money as well on the stock market and indirect investment capital. And we still have the trade accounts surplus because we reduce the export, but we reduce import as well accordingly. So that's a good thing of Vietnam. And of course, we have very stabilized interest rates with a lowering policy rate, but still very high. And then public spending. So we aggressively, our government have been aggressively spend the money for highway and airports and some other mega projects. So that's good. And we hope we can spend up or 90% of the 30 billion this year. That's hopefully will compensate for the reduction in the FDI and private sector investment locally here. Even one of the big cake of the private investment is real estate. Is in a very downturn. And look at China. We have the figure number 3 there, almost declining across the goods item, but agriculture products is picking up. 34.2% up in the first 2 months, and the March last month is increasing as well. So that's a good signal, but not for all items. So we used to expect the reopening of China can make up for the reduction from US and Europe and other major export market, but not yet to come. So before moving to the next section, I would like to hear the view from Mr. Paul Coughlin and then Prachi as a foreigner and having a lot of time working with our team, looking at Vietnamese situation. I would like to hear some view from your observation about macroeconomic outlook and, if possible, the outlook for near term. Or please. Thank you.
Thanks, Mr. Tuan. Well, I think the medium and long term outlook for Vietnam is very strong. Certainly, there's every expectation that foreign investment, and in particular the establishment of manufacturing facilities in Vietnam, will continue to happen in the years ahead. The characteristics of the workforce, regarded as a high quality workforce, but relatively low cost, certainly lower cost than the coastal provinces of China, makes Vietnam, I think, a positive and attractive venue for foreign investment, particularly in the manufacturing sector. And I think a lot of manufacturers now, of course, do not want to be so reliant on China for their logistics and their supplies of critical elements. So again, that will favour Vietnam in the years ahead. I do think in the short term, though, hitting 6.5% growth this year looks like a real stretch, given what we're seeing in terms of exports. And Vietnam's not the only country in that situation. Korea has had a similar kind of experience in the first quarter. And likewise with the downturn in home construction in particular, all the problems we're seeing in the housing industry don't look good for investment in that sector. So I would think 6.5% is a bit of a stretch, but as you mentioned, public sector investment is stepping up, so that might offset some of that. So I think we'll still see decent growth this year, but I wouldn't bet on 6.5%. I would expect it to be lower, as you mentioned before.
How about Prachi? It's good to, as Uncle pointed out, and I would like to provide more information. Take Apple as example. They already put 11 supporting entity for Apple to Vietnam. And just last week, they decided to put another assembly line to some, in the north of Vietnam. So hope and relocating from China and some from India. So in the medium and long term, I think that's one still a major contribution for good for economic growth. Any observation from Prachi when you look at Vietnam as a foreigner?
Yeah. I think one thing also which strikes differently for Vietnam is, like you would see, inflation is pretty much quite steady at around 4.5%. But if you see the fixed deposits rates in Vietnam, they would be about 8 to 9%, and the lending rates are fairly high at about 12 to 14%, which means that Vietnam is one of the few countries which will probably have a positive real interest rate environment. We do see these some of these near-term headwinds, as Mr. Tuan and Mr. Paul mentioned, but I would again like to reiterate the positives that we see in the medium to long term, just as Mr. Paul mentioned, on the low-cost labor, as well as the need to diversify supply chain outside of China, especially post-COVID, and the infrastructure development that we are seeing. There is a government policy of spending a fairly large amount on infrastructure spending, which should have some impetus for the economic development over the medium to long term. Thanks.
Thank you, Prachi. You mentioned about interest rate. So some good news recently is stabilizing and reducing, especially for deposit rate. First, after the policy rate or the base rate by the central bank was lower. So hope things will be and that's make less stress for bond market as well, and capital market, and cost of funding for corporate sector and many sectors we are ratings. So that's lead to given that economic environment, we have some headwinds, something not positive for near term. And let's look at the corporate bond markets and the defaults happened recently. So I would like to have 5 minutes from Mr. Tung Anh to present for our audience about this, and then we can have some discussion. Yes, please.
Sure. Thank you, Mr. Tuan. First, I would like to say that, with this study that we had, we also have a publication on our website on the corporate bond default. And I encourage you, if you want to have a deeper look into these situations, not only from this webinar, you can go into our website and have a look into our publications. First, I want you to look at our figure number 7. So by the time of our study that my team made this study on the default on 17th of March, there were 69 defaulted issuers, and 65 of them was by late payment or delinquency, and 4 of them by the restructurings. But fast forward to this point of time, which is 1 month after this letter of the studies, there are now 89 defaulted issuers with a total value of 113 trillion dollars. This marks a 20%, almost 20% compared to what we have on figure number 7 here. And the new defaulted bonds mainly come from the restructured ones, so which has increased over 2 times in 1 month. And now these the restructured bonds default one is now 11.45 trillion dollars. We also found that the real estate sector has the greatest number of default issuers, so 43 of them out of the 69, which is the highest default ratios at over 20%. And the sector is also had the largest outstanding bond value for the time being at almost 400 trillion dollars, which accounts for almost 1/3 of the total bond outstanding value. So please bear with me that in the study that we conducted based on the sample on the 17th of March, and please look at the figure number 9 that tells us the overall default ratio situations, which is now that you can see the orange, the big orange circle over there in figure 10, that is the default of the real estate. of course, that the renewable energy, which is the small dot up there, has by far the highest ratio at over 63%. The size of real estate is much more impactful in terms of values.
Thank you, Tung Anh. So one of my observations from this, after the new decree, Decree 08, amending the Decree 65 recently, so more bond restructuring has been made by Vietnamese company bond issuers. And remember, this number is the default ratio is based on the bond basic. So some of you may estimate about issuer basics, but as a foreigner here and international specialist here, I would like you to give a few observations about the default situation of corporate bond in Vietnam.
Well, I think the defaults that have, I guess, in terms of Figure 8, the pie chart on the right, a good slice of the green part of the chart there have defaulted since the middle of last month, and I think what we're seeing is the conjunction of several adverse factors. So first of all, and I think it's worth noting again, and that the bonds issued in Vietnam tend to be relatively short term, maybe 3 years. So if you think about the bonds that are just defaulting, they were issued probably late in 2019, early 2020, so just before the COVID lockdowns. So that group have probably encountered every problem that's possible. So the slowdown in construction from COVID, and then more recently the regulatory issues which have intensified in the past year or so, as well as being in an environment where interest rates are extremely high, as Prachi mentioned. So these bond issuers would have been paying probably around 12–13% interest coupon. So it's been a very difficult time for the players in the industry. I think the big question now is whether the delays in repaying the bonds that have been, I guess, organised by the State Bank of Vietnam, is that going to do anything positive? Will the additional time and the ability to borrow additional amounts enable property companies to finish off their projects, sell them and repay debt? Now, I must admit, in the conversations I've had this week in Hanoi, I don't see much optimism on that score. And so it might be that we're just delaying the inevitable in terms of the losses that will inevitably have to be recognised either within the banking system or within the individual investors. So it is a very a difficult situation. It has come about because of that conjunction of a number of very unfavourable factors. And the outlook, as I say, doesn't seem to be that positive.
Let's talk about the delaying or policy forbearance later, because over the weekend, the Vietnamese government, State Bank Vietnam, they issue 2 regulations allowing for a kind of delaying of policy forbearance, and few months, 2 months again, we have a very strong decree by government for delaying the bond for 24 months. So as Tung Anh mentioned, majority of the issuer in default situation is a real estate. So how do you think, as a rating, you have been rating a lot of real estate or residential? What do you think the outlook for default this year? Is that something like China, around 40% for high yield bond, or just kept at Tung Anh mentioned, 30% or so, or how do you think?
I believe the outlook still gloomy, because we not even touch at the highest point of maturity for the outstanding bonds, which will be in Q2 and Q3 of this year. So we believe the rate of defaulted on corporate bonds, especially for real estate sector.
On figure number 11, right?
Yeah, could be higher in later part of this year.
And everyone, you may refer to figure number 12. More than 80% of the issuer are private company, non-public companies, and with a little of information for the bond and for the issue. So that's one of the main issue for the market and for investor. For some of you attending this seminar as well. So, but I would like to ask Tung Anh, so how that's the situation for the bond, but how the scale and size of corporate bond market and the composition, and then that's have some probably some implication for the later section we talk about the impacts.
Sure. So just want to give you a broader picture of the corporate bond markets. So overall, up to this 2023, there's about roughly over 750 issuers, which is non-bank. So non-bank issuers with a total outstanding of around 790 trillion dollars of the total outstanding values.
USD.
And so USD should be 30 billions. And there's like around like 302 real estate developers. So basically, when we had these situations back in 2022 of the regulatories and server scandals, and of course, way even before that, the corporate bonds total outstanding value to GDPs has peaked in 2021 at almost 17%. And there are a lot of talk about how Vietnam can be able to expand the market to 20%, which is also a national goal. But the fact doesn't happen really like what can be planned like that, due to the fact that with the change of regulations and also the fears, the decreasing of the investor confidence, the market has shrunk gradually to just over 14% in 2022.
Let's talk about that very short, Tung Anh. So we have some question from audience about the recovery of bond issuance in last month and this month. But before going for that, some of you may want to compare Vietnam with China. So the bond market size are still relatively very low compared to China. China corporate bond about 46%, 49% of GDP. So here in Vietnam around 14, so a third of that. And mostly domestic bond. We haven't got foreign currency bond yet. Mostly the loan and debt in foreign currency. And the figure number 6 there are the breakdown of bond outstanding value. So the biggest portion of the cake is a real estate bond, and the second is a financial institution, mostly banks, and then equally divided for construction, manufacturing, and securities company and trading and service. And one can question about what should be the most problematic for what sector. So banks, some of the big banks already identified, and Saigon Commercial Bank, some of you may heard about that. But basically, it's our view that it's still stable and no bond default notice. But a lot for real estate developers, as Tung Anh just pointed out previous, right before. So let's we have some data here and question from many of you about the recovery of the bond issuance is in last month. So what's as a reason for that? Is that refinancing or new money from retail or so? So Tung Anh, can you give some comments about that? Is that something the signal of the strong recovery of corporate bond or just temporary?
What we have here is that in March, there are rapid reactions from the government, the lower rates, and then the new regulations with the decrease number 8 on the corporate bond markets and other resolutions. And of course, lately there was the 2 new circulars by the SPV. It could be a sign that we have some room for the issuers to start the activities again. But one thing I can say for sure is that First, you can see that many of them are just real estate bonds, and they may be for refinancing purpose. But maybe that was because of their coming due reasons, and they are in need of issuing the bonds, and many of them are negotiating with the buyers, the investors. But this is not. I mean, we still need to have more observations on this one. It could be a good sign, but we need some time to be sure and confirm that this is a reversal in the market activities.
Thank you, Tung Anh. But that's good to see some new volume and value of the bond issuance, even though for refinancing or repaying the existing debt, is still some good signal for liquidity.
And maybe some sign of soft landing as well.
Yeah. So, and then that's about the corporate bond default. And as speaker here already pointed out, the main issue or problematic is the real estate, and specifically what segment is the residential. Industrial properties are still, performing a little bit much better, but of course they have some mismatch on the funding profile. So we should focus on real estate credit performance, Mr. Kang. So from your surveillance or monitoring this sector and working on many rating action for real estate sector, so can you give the reason why and the outlook for credit performance of real estate sector, given the policy forbearance, given the the liquidity, or given the macro the cost of funding and legal process and so on? Please, you have 5 minutes, please, maximum.
So let's say by Mr. Paul on the situation of the market, that the policy forbearance to calm the market down. But we believe that those are just a delay for the inevitables, because that you can see here, the earnings for the whole sector has been down for like 8 quarters. So COVID-19 is just the trigger to accelerate the path. And you can see on the right-hand side, the volume in the market is died down. So we believe the main reasons we got the gloomy outlook for the market is because that is the aggressive approach by real estate developer in pursuing their next land bank, which obviously some of them was not qualified for development. And that coupled with the legal complication in Vietnam, prolong the process of converting their inventory into sales, so dampening their performances. So that's the first reasons. Secondly, we believe that for a long time, these developers adopted a kind of relaxed capital structure management for quite so long, so they can borrow more money at an accelerated pace in recent years. So that, along with the hostile interest rate environment, which is extremely high, has which constrain their performances, and we believe those are the major reasons they performing weakly in.
Thank you. I'm talking about real estate. The problem is easy for every one of us here and audience as well. But what should be the trigger for the improvement or the outlook in the near and medium term? What should be the most important policy, or waiting for a lower interest rate, or what should be the way out?
So right now, the most complaint we are received by the corporates, especially in this sector, is about legal complications that are prolonged for a few years regarding to the aspect of converting land into residential purpose, or defining the mechanisms for the land use levy for these land, or change the master planning for the project who's not originally included in the master planning. So those are kind of bottleneck that need to be untied in the medium.
Thank you. For audience, the figure number 13, the data is excluded. The Vinhome is the elephant in the room, is excluded. So please be careful when you read the data, because Vinhome is the biggest one, and if you put there, will be some excessive and actually good things. Vinhome still posted latest quarter very good profit and earnings from the back sale, And look at the figure number 14 there. Fundamentally, the liquidity for primary markets apartments sale units is still very low. Typically, before COVID, every year we have about 140 units apartment sold. But you know, let this 2 years only a fifth of that, and 4 months of early this year still very small. So like April just or just now only 1,600 or so. And remember, this is only apartments. If you count the villa or landed house, it should be higher. But we think the apartments sale is a good indicator for any recovery of this market. Paul, it seems you have some comments there? Or?
Yes, I think just the other observation that I would add on top of what I was saying before about the conjunction of all the risk issues is that the property developers we see in Vietnam generally have much higher debt levels than we see in other countries. In most other countries, development activities are not aggressively geared because everyone recognizes this is a very difficult and very risky business. But in Vietnam, the developers have typically heavily geared their project companies. And as mentioned before, they're doing so in an environment of very high interest rates, much higher than most other countries around the world. So undoubtedly, the developers face a difficult position, and it's going to be difficult for them to unwind their positions. And so we hope there'll be some solutions, but again, I wouldn't be holding your breath. This is going to take a while to sort out, I suspect.
But how about the policy forbearance recently by the government for dealing with the corporate bond delaying 24 months? And latest over the weekend, the Central Bank of Vietnam, the State Bank of Vietnam, they give forbearance for around 1 year for any borrowers have some difficulties by external factors, something like that, and they can delay the payment and not classifying them in the non-performing loans. So do you think that could be helpful for
not classifying them as non-performing doesn't change them. They're still non-performing. Obviously, there's been a payment default, and if you want to massage the numbers, you're not really achieving anything different. Obviously, within the Vietnamese regulatory context, it means that bankers can continue to finance these companies. And as I said before, the key thing is whether the additional time allows companies to actually finish the construction of apartments and puts them on the market. The other thing, as you pointed out, the actual sales of apartments in the past year or two has been relatively low. And I would have thought that if they want to increase sales, they're going to have to cut prices substantially. So in part, there's a question of apartment construction, but also a question of sales. And given, again, interest rates are so high for mortgages, I would have thought you're going to have quite an adjustment in prices as well to encourage increased volumes of sales, which again will place profitability problems for the developers. So, the developers ideally would want to be able to increase sales, maintain prices, and delay the day that they have to pay back their debts. But having that happy ending, as it were, is going to be very, very difficult. It's hard to see those three things happening together.
Let's wait and see. But as you pointed out, for Vietnamese context, so any borrowers, companies, once they put in the substandard non-performing loan, we have performing loans, special mention, substandard, doubtful, and loss. So as long as they put in the group number 3, substandard, they are not accessible for any banking, finance, or funding. So that's I can see some positive impact from this policy from the State Bank of Vietnam, allowing for especially the real estate developers, given they are defaulted and even they are in this very stressful situation, to be soft landing and have some hope for access to the banking or non-bank finance again to and waiting for the improvement in the macro condition about interest rate. And of course, as Khang mentioned, very important for Vietnam is a legal process should be clean, not like in the past 5 or 7 years back anymore. So even that's still a number of factor to be watched to see the upgrade or the improvement of residential market in Vietnam. So what should be the implication for our ratings project? We have been rating a few companies in residential, some of them investment grade and some of them speculative. So can you give comments on this? And figure number 15 here.
Yeah, sure. As we saw the trends in the poor earnings performance in the real estate companies in recent times, this is, of course, as a result of slower offtake and credit tightening measures by regulators. Our rating distribution in figure 15 really indicates the stress that this industry is facing. Just want to highlight here that these are credit estimates which are based on publicly available data and not the final ratings where we do have access to company information and management meetings. As you can see, our view is that majority of the ratings in the real estate sector are likely to be in the sub-investment grade category, which is primarily around the BB category. This really indicates that majority of the real estate companies have a moderate to weak capacity to meet their financial obligations. Since we are, of course, a domestic rating agency, we do have a benefit of having a more granular distribution of ratings across the entire rating spectrum of a 22-point scale. And hence, we can better differentiate companies based on their credit profile. Just want to highlight that a higher rating, of course, as you would know, indicates a better ability of an entity to meet its financial obligations in a timely manner. So you really see, most of these real estate companies clustering around the non-investment grade ratings, which primarily indicates the stress that they're currently facing or we expect will likely be facing in the medium term.
Thank you, Prachi. And for some of you as an investor, so no worries, a lot of speculative issuer, but let's think about pricing. And actually still a number of that transaction happening on the markets. And we actually involved in some transaction for credit review or private ratings or whatsoever to support you. And for some of you attending the webinar here, you are the issuer, real estate developers, no worry as well, because just a matter of pricing and still have some investor take up depends on a number of factors about legal, about credit, quality, and about your plan and given some policy support for forbearance and so on, have some chance for carrying over or happy moving extending the time for hopefully the better credit environment and real estate market for pre-sale and sale opening.
Mr. Tuan?
Yes.
Yes, while we've got this figure 15 on the screen, looking at the distribution of credit ratings in the property development sector, it's probably worthwhile making an observation about the striking differences between the Vietnamese property companies and those that we see in, say, Singapore and Hong Kong. The large property companies in those two places tend to do a combination of development and property ownership. So you'll find that, say, the residential property developers in Hong Kong in particular will also maintain ownership of shopping malls, of offices. So they typically have a recurring source of income with which they can support company debt. So even if the market there, property market goes into a downturn, prices fall, they can still service their debts from their rent roll, from their rental properties. The thing that really struck me about these companies in Vietnam is they're purely developers. There's very little recurring income, and they are very dependent on that process of building and selling their properties with very little to fall back on. So that's one of the reasons the bulk of these companies are at the bottom end of the rating scale. If there's a downturn in the property market, as we've seen, they all become very volatile because they don't have that recurring income of rental income to fall back on, as they typically do in Hong Kong and Singapore.
Thank you, Anko. And this based on around 50 listed company. And previously, just mentioned about the default ratio. And for the information, is 83% of them are private company and project company or special vehicle company. So look at the past, it seemed to be very bad, but still there's a number issuer or investment grade company despite the current situation. As you can see, some of them some of the number in the green on the right hand side of the chart number 15, and some information for you. We are watching 5 key factors there. Number 1 is about implementation of policy forbearance given by the government and regulators. Number 2, we are watching very closely monthly sale, specifically the residential and corporate earnings as well. And number 3 is about the interest rate and cost of funding for the sector. Very important. We see some stabilizing the rate and some issuing with some affordable cost of funding. And of course, very important for soft lending for some of the issuer is about market mechanism in M&A and transfer the projects. That should be the good signal to watch if more transaction happening for these markets as a way out. So that's about the credit market. No, it's a real estate credit performance. Very important. And next, what should be the possible impact for the banking system? So we receive a lot of questions and from investor and non-financial investor in counterparty with local banks as well. So I would like to spend about maximum 5 minutes to give the audience about the possible impact for the banking system, given the corporate bond default, given the performance of the real estate sector. Yes. And then we can have some short talk about this topic.
Sure. So what we can say about this one is I would like to get out of the 3 key takeaways from this impacts on the banking sector. First one is that the commercial banks corporate bond portfolio in Vietnam actually recorded a declines after many years of growth due to the fact that they had to reduce their investments as a response to the bond market's negative developments in 2022. And because of that, the commercial bank corporate bonds value decreased by 7.57% compared to 2021, and result to the corporate bond contributions to the interest earning assets to 1.87% and 2.68% respectively. So what we can say here is that we believe that banks are affected, of course, by the declining of the asset quality, which is caused by the spillover from the default in the real estate sector, because as we suppose that if there's an issuer of the corporate bonds who have a default, the possibility of the issuer's bank loans to become non-performing loans will be significant, and almost that most of the capital will be stuck in unfinished projects or delay in handovers. However, the NPLs will diverge between commercial banks. Some banks with high exposure to real estate loans suffer a more significant impact on asset quality, and some of them may have a safer and also have a much safer buffer. But of course, how significant and how severe will be different from banks to banks.
Okay, thank you, Tung Anh. So you can see on the slide there are 3 main key risks to the banking sector that we pointed out. So number 1, Tung Anh mentioned quite details about the investment portfolio in corporate bond by banks. So the scale of the impact should be maximum 3% the total country's loan book or the whole system, and of course included there are some real estate bonds. So the impact could be depends on banks by banks, depends on their exposure. And the good things, policy support, some of you might heard about over the weekend as well. So the central bank allowed some banks to buy back the bond previously they sold to the market. So there's some divided opinion about this. Some view that it's something not good for the system, because previously it's well spread over to many investors, but now taking back for the banking system. But I would think something in the balance between by the policymaker. The bank previously they distributed the bond to the markets, including their banking clients, and now they need to take back, and they are the one who can monitor better the quality and the risk when the issuer failed to pay, and they manage the collateral as well. So some of them may have to take back because issuer they are unable to pay just in case. So it's something the balance for policymaker, and I understand how would think they could handle this. But for the social impact for retail investor is a good news. But for the banking system, maybe something the further burden when the banks are taking up parts of the bond they previously distributed to the market. So the second, Dong Anh did not mention much, but I think that's one of the risks we are watching now, and we have some data. So it's a cross default. So as a background, for regulatory background, for some of you, for the bonds, by definition, our definition and your definitions, even single day, the issuer failed to pay is default. But for banking regulation, when classifying to the non-performing loans, substandard is the overdue normally, no, not normally, it's from 91 days among the other factors. So it's taking some more time, and for some of the issuer will be reflected in the non-performing loan by banking system. And we have some data there. I'm not sure. Yes, some bank there. But before talking about which bank, the total lend credit for real estate sector is around 8% or 7% of the country, of the whole system loan book. So including already included the corporate bond there. So the impact could be depends on the which bank and the percentage of the bond going to be default. So we did have some scenario and stress test here, but we will watch out it should be the impact. And the third one important as well, the bigger cake of the situation is about mortgage or housing loan. It's around 15 or 16% of the country of the whole system. It's taking time for being the classifying as default or non-performing loans, but depends on the delivery of the housing from developers for them. Otherwise they don't have an asset and they have to pay the banking interest. So that's something, the unexpected situation for hundreds Vietnamese home buyer who borrow to buy the houses. So I would like to have some comments from Anh Pho on this situation for Vietnamese bank and from your observation.
Well, certainly the recent announcements from the State Bank and other parts of the government in terms of steps around forbearance, I think is a mixed package. In part, it doesn't really deliver market disciplines. It doesn't help the banking system develop the risk management that it needs to have, which I think is unfortunate. On the other hand, as I said before, it may give the property companies some time to finish off their projects and deliver the goods and perhaps enable repayment. But the other thing that I think is positive in terms of the risk-absorbing capacity of the banking systems is that the net interest margins of the Vietnamese banks are actually rather high by international standards. Whilst fixed deposits from the banks, they may be paying out 7-8%. And we were just at a bank this morning that was offering 7.8% for a fixed deposit of, I think, 1 year. A lot of their current deposits, they're paying very, very low rates. So, and as we saw with these bonds, these ones are paying 12-13% interest. So the ability of the Vietnamese banks to absorb and charge off bad loans is quite substantial. I think that's a positive. I think the reason the property companies issued bonds to the market in the first place was that the banks were at the top of their limits to property, and it was considered unwise to continue to extend credit. And that would have been, I hope, a decision of the bank's risk managers, but I suspect also guidance from the State Bank of Vietnam. So the requirement or the expectation that banks, in a sense, buy back the bonds they've distributed actually increases bank exposure to the property market, and the whole purpose of limiting exposure to the property market has thus been defeated. So, as I say, the steps that have been taken over the past week, it's a very mixed bag in terms of both the immediate and long-term impact on the banks. But I would go back to, whilst a number of the banks, the capitalisation isn't particularly strong, at least there is a very wide interest margin between their cost of funds and the rate they lend out at. And as I say, they should have an ability to charge off, it's the bulk of them, substantial bad debts, and that's positive. I think if you're examining the banking system, yes, look to exposure to the bond market, look to exposure to the property sector, not so much mortgages, but property developers, and really look at both that in the context of both the equity level of equity of the bank, but also their net interest margin. So when judging whether this is survivable for individual banks, they're the things to look at, because I suspect you will find over the next 2 or 3 years, a good number of the banks are going to have to charge off significant bad debts. I don't think there's any way they can avoid it. The State Bank might ask people to delay the recognition, but real world, it looks like there'll be substantial bad debts that are going to have to be charged off one way or another over the next few years.
Thank you, Info. And on the figure number 17 or 18, we have some data there for, banks who have a, more significant exposure for corporate bond and real estate. But remember, the high exposure percentage of credit for real estate or C bond, it doesn't mean that they are weak banks. It depends on further analysis and of course, the non-credit fee and other banking service and overseas remittance and non-banking and non-credit income as well, and capital adequacy. So please be advised.
Yeah, just be clear about that. So figure 17 is all bonds, not necessarily just the property bonds. So you just need to figure out here which one of those banks were holding what kind of bonds. And on figure 18, that's total real estate exposures, and that aggregates just retail mortgages with exposure to property developers. So obviously you're more concerned about the property developers than the retail mortgages. So again, don't jump to too many conclusions looking at that one, other than to say, obviously across the system as a whole, there are substantial exposures to developers, but that average there is that mixed together to very different types of exposure.
Even in the real estate, we have different segments. So we have been rating few industrial properties, so they can have a different credit profile comparing to residential segment and office segment and other segment as well, retail segment in the real estate and so on, just recovering quite well after the COVID. So it's so move to the implication. So having said that, so for the impact of the real asset credit and C bond. So what should be the implication for rating of banks? I would like to have some view or sharing from Prachi, from your experience and your working with our team in credit estimate for public companies for banks. So please.
Right. Yeah, I just want to add one more point to the previous slide that we were talking about, that when we are assessing banks, like Mr. Tuan was mentioning, it's not that it's a real estate exposure and hence necessarily be bad. We actually look at the top exposures by each credit while assessing a bank to assess whether it's risky or the real estate exposure or any other exposure for that matter is still okay from a liquidity perspective. So I just wanted to keep that point in front of the audience. As we move forward to the rating distribution of banks, the next slide, please. Yeah. So as you can see in figure 20, this is the standalone credit profile distribution of commercial banks in Vietnam as per our assessment. Please bear in mind, this does not include any element of parent or government support which a bank could receive as part of an extraordinary support. This is the pure standalone credit profile of the commercial banks in Vietnam. And as you can see that, our assessment has gone a bit subdued from 2021 when we are assessing banks in 2022. But nonetheless, I would say majority of the banks we believe are still stable, and the standalone credit profile appears to be averaging around A minus sort of rating category, which still is adequately stable, I would say. And the reasons behind this is that we believe that the banking system is a critical component to the overall economy, as it is for most economies across the world. We do believe that there are banks in Vietnam which have their own niche and which have good quality risk management, which reflects in some of the high ratings that you see here in the AA and the high A categories. Of course, I would like you to draw attention also to the lower side of the rating spectrum, where you do see that there are a few banks which are rated in the BB, single B category. And this clearly indicates that these are banks with a fairly poor business risk profile, and more importantly, a weak financial risk profile. An example could be that of Saigon Commercial Bank, which will probably be rated in the B category. There could be banks which have a high potential for going insolvent in the near term, and hence the lower ratings in our scale.
Thank you, Prachi. And Paul, you want to add on some?
Just to reinforce what Prachi has said, this is the local rating scale here, where we can use the entirety. We don't have a sovereign rating cutoff. But it's that distribution of ratings, or in this case, credit profiles, is important. The ratings in the profiles in the BB, single B, really is very, very unusual for banks. Basically, undoubted strength is a standard requirement for any successful bank. And clearly, we do have there 4 banks where their fundamentals would not seem to be sound, and yet are allowed to continue to exist, well, except for Saigon Commercial Bank, I guess, which is one of those. But it's an unusual feature of the Vietnamese banking system that the regulator, again, allows forbearance, not just for individual debts, as we've seen in real estate, but actually around entire banks. In any other system, they would have been closed and merged with stronger banks many years ago. And that is an unusual feature of the banking system here that we need to keep an eye on. And obviously the bad debts in the property sector will no doubt continue to pile pressure on those banks.
Thank you, Wenko. And for our audience, for the information, we haven't got solicited or engaged or mandated by any Vietnamese bank yet, although we rated few non-bank institutions and many corporates, companies. But we are very open to support you. You would like to have some credit assessment or some indicative from sorry, our rating analysis for based on the public information and our credit models. We are happy to support you, especially for trade finance and counterparty risk. That we have been working with some insurance company or foreign banks when looking at Vietnamese counterparts in their transaction correspondent banking and trade finance and so on. I would like to touch on one point. We have some question from audience before the event. For the case of what happening in banking system in US and global, in Europe, a number of default and bankruptcy or forced consolidation, people here tend to agree that we don't have that kind of issue at the local market. Not sure, but and seem to be some lesson learned. So from your observation and looking at, I see you looking at very closely on the case of Silicon Valley or Signature Bank or so on, Credit Suisse. So what should be the lesson for Vietnam, markets for banking system and how does, please?
Well, I think to note is that different banking systems have very different regimes for regulation and support, and certainly in the US market, banks there are, the banking system is supported by addressing issues as quickly as possible and indeed closing down weak banks as soon as possible. So if you think about Silicon Valley Bank, which was a medium-sized bank, assets of about, I think, 212 billion US or thereabouts, they had been, because of it was a specialist bank servicing the high-tech industry, and they were the recipients of deposits from these often startup businesses that were being supported by infusions of equity. So given that the equity market for the high-tech businesses really weakened during the course of last year, these businesses, the high-tech businesses, weren't getting the capital infusions that they had been getting in previous years. And those infusions effectively ended up in good part at Silicon Valley Bank and formed a major part of their deposit base. And as those deposits were being run down, the liquidity of Silicon Valley Bank was being challenged. And that was quite apparent by the end of last year. Both Standard & Poor's and Moody's commented upon that and adjusted the rating several months ago, well before the closure. But that bank, I think, was rated around BBB or thereabouts, and it was actually much stronger than a good number of the banks we see at the bottom end here. But rather than provide support, the US regulators effectively seized the bank and sold on its good assets to another bank. So what you tend to see in the US is a predilection for rapid resolution. And if that involves inflicting losses on the shareholders and wholesale counterparties, well, that's what they do. So they wouldn't, I think you wouldn't get this tail end of banks surviving under the US regulatory system. In terms of, and that then led to, I think, a flow-on, a contagion effect, looking for other banks that had similar characteristics as Silicon Valley Bank, which I think led to the similar fate for the Signature Bank and current pressure that we're still seeing on other banks in the US. So whilst I don't think there's a panic in the US, there's still certainly people paying attention to the credit quality of the banks they're dealing with. And the American, the American regulators are certainly not as supportive as you might see the Vietnamese regulators, but their support is to support the system as a whole, to weed out the weak ones, and to do it decisively. In a sense, you see the reverse here in Vietnam. In terms of Credit Suisse, that got caught up in the confidence issues. I think a lot of it's very unique to Credit Suisse. Credit Suisse was a very and is a very large bank. It's being owned by, it's a Swiss company in a very small country. So both UBS and Credit Suisse are huge in comparison with the size of Switzerland and its economy. So it imposed an enormous burden on the Swiss National Bank to both supervise and, where necessary, provide liquidity support. So I think that was quite a unique situation, but investors will notice that the Swiss National Bank did inflict heavy losses on the equity holders of Credit Suisse and also the holders of subordinated debt in the bank, which they actually wiped out in this process. So it's been a very favourable outcome for UBS, but not so much for the Credit Suisse shareholders and bondholders. Again, that was what I would call taking preventive action, and the special situation of Switzerland of not wanting to have two large outsized banks they had to support. And I think you'll see in due course that the expectations is UBS will shrink the size of what were the two banks, and they'll presumably continue on their plans to list their investment bank in London and try to move some of the risk out of the Swiss system into the British banking system. So some fairly unique things there in Switzerland. But I think if you want to contrast, in Vietnam, we see lots of forbearance, letting difficult situations play out for many, many years. I think you will all appreciate that they're still at the tail end of cleaning up problems from the last cycle, from the aftermath of the global financial crisis, versus other systems that tend to take more rapid, proactive and decisive moves to sort of clean up a system as a whole. But in doing so, are very clear they will inflict losses on holders and wholesale exposure.
Thank you, Paul. Probably Vietnamese government, they have the own way of intervention. And for the tail, the weak banks there from double B and below, probably they are mostly identified as the weak banks, publicly or non-publicly, and under the amended law on credit institution in progress. So it's the intention to clean up or force further consolidated in some other banks or even bankruptcy. But let the bank go, die. So hope things will be happen in the good way for sector consolidation, and banks, as you pointed out, should be normally good credit ratings, but not the case for Vietnam. And they are making noise in the credit markets by raising the bar for interest deposit rate. And some retail investor, elderly people, they don't know what is that, so they can just pick up the high deposit rate to put money in. So like the case of Saigon Commercial Banks, they became the big bank by that way. So we are spending 1.5 hours about already, and we will have about 20 minutes more, or 15 or 20 minutes more to take your questions. So audience, please, we still open for any question. So please put on the chat room there. So I will scan it, and it's relevant for the topic. I will pick up. And in the meantime, we have reviewed the question sent to us by the audience before this seminar. We have around 10 or 12, so depends on the timing. I hope we can take it up all, but if not, let's take 50% or 70% of that. So the first question, so probably for Tung Anh, who are the main investor? I think you mentioned already, but maybe short confirming again if you have information. For the bond issue in Q1, who are the main buyers? And is that the recovery of the bond issuance? Or do you think it's the outlook for following months? Yes.
So most of the bonds were issued during this Q1 is real estate, and of course we don't have the public information about the investors. But what we can see in the characteristic of the deals, I assume that will be banks and financial institutions to be participate mainly in as a main investors. And I will not talk about the recoveries as I mentioned before. And of course, we would hope that this situation will be improving toward the end of the 2023.
Okay, so question number one, credit environment by the end of this year and opportunities for foreign investors or creditors. So Khan, you want to take up this?
I think the outlook will differentiate between sectors. So for the several sectors we just mentioned, like real estate, we still believe the next 6 months is important, but the timeline for real changes could become in the next timeline of 12 months to see it clear. But in general, we see that the credit profiles of our survey companies was, still sluggish in the first quarter of 2023. So we need more time to see a clear picture in the second half of this year.
Thank you, Kang. Allow me to give some view here. Credit environment, I think it depends on macroeconomics. We have a number of headwinds, but that's beyond the regulator and government. But I think something positive, and let's see in the next few months, is about the interest rate. Given the inflation here expected this year, by the end of this year, about 3.5%. And we have the room for credit easing policy by the Vietnamese government. Of course, giving money to the right borrowers and to maintain the credit quality is important. But I think the interest rate is important to watch. And of course, for real estate is a legal clearance and the policy support. That's make the real estate and renewable as well bankable again. So that's I think the two factors that's foreign investor could watch out. And for the opportunities for foreign investor, actually from our observation over the past 20 years, whenever we have some problem domestically here, probably some of investor could find the opportunity better. So actually, over the past few months, the number of deals and the money flow from debt fund, from M&A in the number of sector, especially renewable and some non-financial sector, we see still some transaction. And I believe, 2 years ago, 3 years ago, when everything was good, I would say it's the seller or Vietnamese counterpart could be very reluctant to talk with you if you are the investor. But now they could be open. It depends on the pricing and interest rate. So I would think to some extent it's an opportunity more than for foreign investor. And think about the new regulation on investor side locally here. Insurance company. They couldn't invest in the bond for issue for refinancing purpose. So that's good. Of course, that's something the local, the market issue for the local domestic market, but that's open up some opportunity for foreign debt fund or foreign investor or corporate investor to invest in Vietnamese companies. So that's something about insurance as well. In question number 3, Prachi and Phone, you want to take that? Why Vietnamese insurance company cannot invest in C-bond issuing for refinancing purpose? Is that good or bad, or is international practice, or what we should do to remove this kind of restriction for investment by for insurance company?
Well,
Prachi,
you go ahead.
Yeah, I mean, I just want to share my experience working in the Indian markets, and just generally insurance companies have stricter rules to make investments across asset classes or the quality of investments that they put their money in. And the primary reason for this is to ensure safety of the policyholders' funds. Just to give you an example, the insurance companies in India are not allowed to invest in bonds which are rated below AA. So they can only invest in the AA or AAA ratings. I do believe that rating agencies like FinRatings can be a good a mechanism to drive this market and to differentiate credit quality of entities so that the insurance companies have a wider asset class to invest in.
Thank you, Prachi. We hope so. But
in terms of this specific prohibition on insurance companies investing in refinancing of bonds, I don't know any other country that does that. It's an eccentric kind of rule. For large companies, debt forms a permanent part of their balance sheet, and they do refinance. And in most other markets, people don't distinguish between primary debt issuance and refinancing. So this restriction on refinancing does seem unusual, let me put it that way, and it's not obvious the function that it serves, to say, it doesn't really account for the sort of mismatch between assets and liabilities. Sometimes you've got very long-lived assets, and it's to be expected that there will be refinancings, and that banks will have debt on their balance sheets, and it's not obvious why you would make that distinction between primary issuance and refinancing. And in most other markets, you can't tell the difference anyway.
Yeah. Probably they thought refinancing purpose is too risky for insurance business. Probably.
I think this kind of preventative measure, because in Vietnam, the infrastructure for bond market is not well developed, like secondary market or rating. So it's not well inflated. So they worry that, they cannot liquidate the portfolio in emergency case, or they cannot invest in a great AAA like purchases here. So it's preventative measure. So it could be subside in future.
Thank you, Kang. That refer me to one idea and policy recommendation about to develop the investor base for corporate bond markets. And actually, the banks, financial institution, pension. No, we don't have a pension yet, but bond fund, insurance, and even corporate investor should be the main buyer in this market. But it will take some time, some years to amend it, or to improve the investor base for corporate bond markets, especially the private placement bond. For public, it's very clear, anyone can buy them. But for private bonds, we have some issue with definition of professional investor, and they have put some restriction for banks and then insurance and so on. So that's caused the suspension of the bond markets, as Tung Anh just pointed out. So, sorry. Let's move forward to the question number 4. It's referred to the issue exactly that I just mentioned. What's the audience says it's strange to hear that individual investor in Vietnam can buy private bonds easily. In other markets, financial institution and like funds, pension, insurance should be the main buyer. So how do you think about the development trend in coming years, Tung Anh?
Well, I think that privately placed bonds should be private. So in a sense that to have the individual investors in Vietnam to invest in the private placement bond was indeed strange. But of course, due to the relaxed regulations, that creates opportunity for the investors, and of course also for the intermediary to make a profit for them as well. So by far with this trends, of course, it is a kind of a distortion in the market. But with the new regulation, especially with the we actually have the Decree 65 to have a stricter clause on the qualified investors, but it was delayed until next year. And I believe that after this one and until 2024, when the clause on the required the qualified investors to be in effect, that will be the trend towards this investor. So the investor will still be exposed to the bond markets, but through the institutional like funds, pension funds, or any others way, or they can involve directly with the public offerings. But the situation will phase out and not to be happen again in the futures.
Okay, thank you, Tung Anh. Just a general question. I think we move on some specific question about corporate bond and real estate. And how much time do you have? 15 minutes, 10, 15 minutes. So the question about how the policy support in legal issue and project licensing process in Vietnam. So it's not only important for foreign investor like them, like us, but also for developers to access to the domestic banking loans and C-bond and market mechanism. I guess it's the M&A for soft landing of the current turmoil. So, Kang, can you I think you shared something already, but just very short. What's the view for that, given some policy action by the government level and Ministry of Construction and Monre?
Right? Very quickly, all the policy forbearance are supporting us, help the market to calm down. So currently, the government are pushing to solve the bottlenecks in the legal issues, mainly comprised of first, which is the process of converting land into residential real estate. Secondly, it could be the mechanism to define the land use levy, which is the obligation of the developer. So they would like to pay that money in order to make the land ready for development. And thirdly, which is the project previously not included in the matters planning and having trouble with the project licensing. So that three main issues that the government is working on.
The question number 2, I think, is for you as well. Given the earnings deterioration, how Vietnamese real estate developer can arrange financing for that coming due in this year?
Yeah.
And how's impact for the rating of that issuer?
Yeah. If you can go back to this distribution of real estate companies, firstly, not many companies having trouble with their earnings. Some even reported positive news regarding their earnings in first quarter of 2023. But on the right hand side, especially for highly geared companies, I'm not too optimistic about these policy forbearance because the reason why they turn to bond market because they have a kind of credit limitation at banks, and when they issue bond, they do not have required to have underlying assets. So that's the reason why they turn to bond markets and consider the context of high interest rate right now. It's difficult for them to mobilize funds from banks and bond market. So the option we see here is they have to rely on the discount on the assets and agree on the M&A and project transfer.
Soft lending.
Yeah, soft lending.
Haircut.
Yeah. So I believe these has been reflected in our rating, assessments.
And the question about the impact for rating of the issuer, as I can pointed out, and in the slide we indicated already.
Yeah.
And the audience asked for pricing. So quick answer, observation from us. We are not, advisory, or investment banking, but we see for speculative weak issuer, the rate coupon, still 14 or even 16 in Vietnamese đồng for 3 years term or even 2 years term. And USD something like more than 10% per year, 11 or 12%. And if you add on the hedging cost, effectively it could be a little bit higher. So it depends on the quality of the issuer. That's some of our observation for pricing. That they are paying or they are transactioning, in the markets. So the question number 3, the people here asking about the problematic issuer seem to be a residential property segment. But how about the Fin rating assessment for industrial properties and in Vietnam?
Other than regional developer, we were not too pessimistic about the outlook of industrial park developer because given those mentioned the advantages of Vietnam, like young and dynamic workforce, and also many preferential conditions, we see especially we're not worrying too much about the deadline of FDI because we're seeing that the chance of diversify the manufacturing infrastructures of these companies are getting higher. The demands for expansions, especially the large scale companies like LG or Samsung, they still craving for new lands to expand their phase threes of the expansions. And we see that a lot of big deal has been executed in the first few months of 2020.
So overall, it's a little bit better than residential, right?
Yeah.
The outlook as well, and the current.
Yeah, they also do not require to have kind of embedded high gear, high leverage in their capital structures.
Next, I would like you, Kang, to touch on, and then probably Angpo to answer question number 4. What's the assessment by FinRating for the bond offering by renewable energy developers in the context of draft PDP8? It's a Power Development Plan 8 drafted, and current credit environment in Vietnam, and what should be the key risks in assessing a wind project?
For the first part, I believe that the still a lot of uncertainty regarding to PDP8. It's not been true for the last 2 years, and then recently the news that only 1 over 85 project who meets the deadline of COD, commercial operation date, subject for the new power purchase agreements, which is proposed by Ministry of Trade and Industry. So it say that a lot of uncertainty regarding to the purchase power agreements between them. So, but still we see a lot of projects, they propose kind of, refinancing opportunities for an investor, because naturally these companies can only borrow for, let's say, 5 or 8 years, and now it's time for them to restructure their balance sheet.
Yeah, the mismatch of funding profile for renewable energy developer Vietnamese in Vietnam is clear, and of course, the default ratio for this sector is significantly high as well. But what if the PDP8 plan by the government issued soon, next month or so? So yeah, they may have a new sort of funding, right? Yeah. Even the feed-in tariff is lower. So how do you think? And then Angpo, you want to add in what sort of observation from your?
Well,
yeah, please, Angpo.
I think you have to think about 2 things. One is whether there are appropriate offtake contracts, which there haven't been. So even the first round of solar plants, whilst they have a particular price promised, they don't have a non-take promise. So they're not really bankable propositions. And then there's just the economics. Do the offtake prices make sense given the price that the power then is sold by EVN? And finally, does EVN really have the transmission system that's required to really facilitate development of renewables, which tend to be quite some distance away from the major load centres? So I think there's numerous challenges in this renewable sector, both the fundamental cost of producing power, the economics of selling, the contractual arrangements, and then just the physical configuration of the grid. Now, none of those problems are exclusive to Vietnam. There are similar problems in other systems, but probably you don't see all of those problems appearing at the same time in the same system elsewhere.
Thank you, Angpo. And let me share some of my experience from FinRating and FinGroup. We have done some credit due diligence for renewable energy. So here, the key risk or the key issue one investor, especially a foreign investor, should care about, I think I can summarize in the 5 issues. Number 1, I think you should check the land use right, not only for the wind farm or the solar farm, the main one, but the grid chance, from the farm to the national grid as well. And many cases in Vietnam, they share the same line. And let's check how they have the land use right certificate for that as well, and the storage, because normally they invest in the storage as well. At night, and distribute to the national grid in the day. So just make sure the legal issue is clear. And number two is check very carefully the design and the master plan at some province, because for example, the wind, onshore wind, you invest in, and what happened in the next day or next year, some other they put the next to it, and the wind direction will change the way around, and that's impact the efficiency of the acquired plants. And yes, financially they have some issue as well, but try to make sure the local developers they claim the value added tax for you. Because the import from equipment from overseas is tax deductible, and in the early years of investment is you have incur a lot of tax deductible. So make sure the local partner they claim it for you. Otherwise, it depends on the relationship as well. So we have a few other observations. So happy to share with you further if anyone of the audience would like to discuss more about this sector. We have a lot of rating experience and credit due diligence to support you to make investment with the confidence in Vietnam for this interesting sector. So next, we have a number of questions here, but mostly some of them are more commercial. So I would pick one or two, and then we review any comments online so we can finish our seminar today. So the policy forbearance, I think we discussed a lot already. So it's the view here is more technical and reporting, but we share the view locally here. It's good for trouble. The issuer in trouble, either for bond or banking credit, can have a chance for happy ending and carrying forward the problem and hope for a better things happen about credit rate, the cost of funding and the recovery of the market and so on. So that's the way Vietnamese doing. So in the last financial crisis, we are not talking about crisis coming soon, but that's the way to support policy support. But in substance, everything the same. So please understand that. So number two is default ratio. So Tung Anh already mentioned and have some outlook about that. But to me, very simple. 83% of them are private company, and credit performance extremely weak. Leverage 10 times, 35 times, very typical. So given this, what Kang just mentioned, so I would think the default ratio could be increased day by day, depends on the disclosure. And the impact for the banking system will depend on policy forbearance. Of course, for reporting purpose, but we hope this could be soft lending for the for real estate and certain sector. Here, you question about so we have few other questions, but I think given the time, I think should we take one or two more questions in the chat?
Yeah, well, something in the chat would be.
Oh, yes. So let's review the chart here. Question for the panel: what's driving high default rate in energy sector? Tung Anh, can you?
So we already have discussed about the PDP8 and one mentioned with the Mr. Kang. So basically we have the bond with the project of the renewable energy spans from 5 to 8 years, and of course
they asked about this chart, I think.
Yeah. Yes.
Default ratio 60 something.
Yes, so the figure is 63.1% of the renewable energies. So what we had there is that they have the renewable project, like I mentioned, is with the 5 to 8 years. And with the issues, of course, we can account for the COVID and of course other relevant, and the most significant factor is the PDP8, the prolongs of the preparations of the master plans that delay the project, the renewable energies projects, and with that, with the mismatch of the maturities that get them into this cycle of refinancing and difficulties of refinancing.
Okay, got it. So you mean the main reason is funding profile mismatch, or what?
Yeah, another.
So be short and simple, please.
Another reason is that they have a extremely high investment on this project, and the curtailment rates take.
So number one is mismatch of the funding. Number two is curtailment risk. Cut down the volume, right? Number three, what are the main reasons?
That is the efficiency of the investments.
What do you mean by efficiency? Sorry.
The curtailment risk affect the operating performance of the company.
Okay, thank you, Kang. And for I would like to add one more because one of the prominent issue defaulted the biggest elephant in the room. So that's why the default ratio very high. And fundamentally, as a speaker here already mentioned, we have a number of issues: funding mismatch and delay in the master plan, and curtailment risk, overloading in the national grid, and so on. And on-tech and off-tech, as Mr. Paul Coughlin mentioned, and few more. So I think that's enough for now. So what's your view on the plan or rumor consolidation of small bank in the larger, healthier banks, Vietcombank, Military Bank, HD Bank, and I think VP Bank? Is that the right way to handle this problem institution? How does that compare to historical M&A in Vietnam? It's by some foreign investor. So anyone would like to share?
You can do that.
Okay, so rumor in Vietnam is normally trumo. So I think that's the way Vietnamese doing for forced consolidation in Vietnamese banking system. Some people say it's a matter of putting two bad guys in the room and they still the bad guys, but the support policy support based on the historical cases, the central bank still provides some facility for the acquirer to support the weaker banks. And also we mentioned about the rating distribution of Vietnamese bank. We don't have much, don't have so many banks. That's only less than 30. But we hope to, as a way, I think we appreciate the action by the government and the amended law on credit institution to further clean up the weak banks to avoid the noises in the capital market, especially deposit markets over the past time. Some of them offering like more than 10%, 11% for deposits. And why the government asking for further lowering the cost of funding for enterprises, and that's make the policy efficiency affected. So we would expect more consolidation happening soon. As you pointed out here, rumor, but some of them, I think it's official in the AGM, in the shareholder meeting of the banks, some of them. The next, what do you think about the impact of newly released Circular 03 on the corporate bond market liquidity and expected to be under heavy pressure for that coming due in late Q2?
I think that the Circular 03 is mostly to help with the accounting, with the reporting purpose. So essentially, we are, as a credit rating agency, so from our point, especially with the analytical views, that is still that, and it can help the it's a way for policy forbearance, but it's in a way this is like Circular 03 is for banks to repurchase what is the distribution. So it's already mentioned by Mr. Paul about getting the banks back to exposed to the risk of the real estate. And it's more like to get that out in the system and without any extremes or critical ways to solve the problem. So it may be just helping to delay and the inevitable.
Let me share my own view. Okay, I'm not part of analyst team as a CEO. That's yes, fundamentally it's not good. But look at some banks. Previously, they mis-selling the bond to the markets, and now that's responsibility to take up. Otherwise, they put their customer in trouble. So, and it depends on the bank. So they take it up, they bear the risk, and they control the collateral, and they have a better tool or function to work with the issuer. So I think to some extent it's good for the society as a whole. So that's my personal view, by the way. Of course, it's, someone say banking could take up more risk from taking back the corporate bond. But, again, I think that's the regulator. They need to balance, for the whole market as a whole. Otherwise, some bank could be in the trouble because of the court cases from their clients, banking clients, because issuer, the clients of the bank, that's their advice, and are not in the position to pay back the money for principal or the interest. So I think we go through almost 2 hours already, and we have a few minutes left. So before we say goodbye to all of you, allow me to share a very short, few things, what we have been doing here with the ratings and non-rating work. So we are FinRating and a member of FinGroup, the holding company. We know a number of things, information business, information, private company, and market research. And credit ratings, everything we do is data-driven. That's our competitive advantage comparing to any other professional firm. And we are happy to support, to facilitate the capital flow, investment flows within Vietnam and cross-border as well to some of you as a foreign counterparts for Vietnamese companies. For rating, we have only 3 years old, but with support from our partners and S&P Global Ratings and Mr. Paul Coughlin here and Miss Prachi. So we are happy to have some very initial impact for the better markets, for the functioning of the markets, and hopefully it will be incorporated in the regulation for better for investor side as well, and for market transparency, especially in the next 2 months. Secondary market official centralized corporate bond markets, secondary market on Hanoi Stock Exchange will be launching. So we hope to support the transparency and the secondary trading as a for better functioning of the corporate bond market. This here is a 20 issuer that we have been rating. So some of them successfully raised the capital onshore and offshore. So we are happy to support issuer from the rating and maintain communication with investor as a role of the credit rating agency. So we are not supporting issuer as our client, the one normally pay us, but sometimes we have investor as well if the issuer do not engage us. So we are happy to work with you as an investor in a number of things. So we can have a credit assessment, credit diligence, as I mentioned before, or anything about the green and ESG. We are happy to support and work with the investor in Vietnam credit market and capital markets. So this is some of our track record. So that's all. We thank you very much, audience, for staying with us over the past 2 hours, talking about a little bit technical topics. Sorry for that, but we hope it provides some useful information for you, especially for serious investors who are having exposure here or planning to make investment here, either in debt market or even equity market, or making direct investment in Vietnam, or having trade relationship with the Vietnamese counterparts. And special thanks for speaker, Mr. Paul Coughlin and Prachi joining us from Singapore, and Mr. Khang, Mr. Tung Anh, our analytical team. Appreciate that. And we hope to see you in other occasion events. And we still have a lot of publication and written announcement to come. So please keep watching or follow us on our social account or emailing list. So we hope it's provide more often or regular information for you, and we hope to help you making business and investment with confidence in Vietnam. Thank you very much, and looking forward to working for talking with you in other occasion. Thank you.